Hello, my name is Nick Quinn.
Hi, I'm Connor Woods.
Hello, I'm Shane Vernier, and we're the market analyst team at howtotrade.com. Together, we're going to explain everything you need to know about trading the XABCD pattern. All right, let's get started.
The XABCD pattern is one of the harmonic series developed by Harold McKinley Gartley. When combined with Fibonacci retracement levels, it acts as a powerful signal that indicates when a trend is about to continue. It's got 5 distinct points and 4 legs: X to A to B, B to C, and C to D. It can be bullish or bearish and is considered to be the basic structure that forms all other harmonics in technical analysis. So let's take a look at exactly how we'd go about identifying it in a price chart. So when we talk about XABCD patterns, what we're really talking about is a generic structure, a generic term which really encompasses most of the harmonic series of different chart patterns that traders use. They tend to be built off a major swing, a major high and a major low that are created within the market. They always have a starting point, which will be our X, and then we have an A, B, a C, and a D. Now, there's various different structures the way that they fall, but the key point to remember is that most harmonic series patterns are in tune with various different Fibonacci ratios, and the various turning points tend to interact with Fibonacci ratios as they develop in time. Some tools that you can use, particularly in TradingView, also allow you to bring in the element of time as well as part of where the placement of the XABCD should take place as well. But generally, we would be looking for the D point here as the place where we would look to make a trading decision. But just bear in mind as well that they can be bullish and that they can be bearish. But that is the basic overall structure that we'd be looking for in price action.
So let's have a look at how we can trade using the XABCD candlestick pattern. Now it works at any time frame, on any instrument. Drawing the pattern manually in a trading chart, it's almost impossible. But we do have, with most trading charting platforms these days, allows you to sort of add that pattern and draw that pattern automatically as a built-in indicator. So we're going to look at this chart now, and we're going to see this pattern coming in when I get my markings on. We've got that X to A, the A to B, B to C, and then that point D, like with all harmonic patterns, that's our key entry level. Now, like any of these harmonic patterns, you can use Fibonacci, for example, to give that confirmation of that entry. So if we draw that X to A, we can see that when we reach point D, we reacted from this 38.2% level. So theoretically, we would have entered a short position here, and this is a bearish Gartley pattern forming, or that's been formed. So we'd go short of this 38.2%. Now with the Gartleys, it is important to have that stop loss around where that point X is, but that's absolutely fine. It is quite a large stop loss in this case, but you can see that we managed to yield a 2-to-1 risk reward trade. Depending on your trading strategy and your stop loss levels, you can have them a bit lower, maybe at point B, but generally speaking, it'd be around where this point X is, and you can see we yielded a really nice 2-to-1 risk reward trade here.
Okay, let's go over a few of the key pros and cons for the XABCD pattern. On the pro side of the ledger, if used correctly, XABCD patterns are highly accurate. Also, the pattern can be used in combination with other chart patterns and technical indicators. Now, on the con side, the XABCD harmonic chart pattern is a relatively complicated pattern to understand and use, so it's not ideal for beginners as it does take some experience to spot the XABCD pattern in the live market. Also, stop loss placement is not well defined on all XABCD harmonic patterns. Sometimes with the crab and butterfly, you have more of a nuance involved with locating exact stop loss placement. And lastly, the XABCD may conflict with Fibonacci ratio, so it's not necessarily a Fibonacci built indicator, but is more of a external construct. Now, let's review some of the key takeaways from the XABCD pattern. Number one, the XABCD is the basis for harmonic chart patterns with 5 points and 4 legs. These 5 points and 4 legs connect to form the patterns. Number two, there are 4 major XABCD chart patterns: the Gartley, the butterfly, the crab, and the bat. Number 3, to trade XABCD patterns, you need to draw the pattern on your trading software using a built-in indicator. Number 4, your entry level should be at the D point. A stop loss is placed at the X level for Gartley and BAT patterns, and take profits at the C and A levels or below specified Fibonacci levels. Now, if you want to learn more about the XABCD pattern, be sure to check out the How to Trade Trading Academy inside our trading room. There, you'll find a longer form tutorial where we'll show you how to fit the XABCD pattern into your own trading methodology. We'll then demonstrate how to take that plan and trade it against real market price action. You'll have everything you need to gain valuable market experience, and once you're ready, feel free to join our How to Trade Funded Trader program.